Good afternoon, everybody. Going to go over our Forex trades for today, Tuesday, May 24th. Hope everybody had a good weekend. No trades yesterday, although we did initiate a position in the Aussie yen, which we will go over that in a minute. And we also had a trade last night in US dollar Japanese yen, which was a scalp, which we correlated with the Swiss franc to Japanese yen. So we'll go over those three trades in a minute. Just first, I want to talk about the economic news. According to Bank of America, this past week was the 17th consecutive week that smart money has been net sellers. Just something to point out. It's a record. That's a record streak. Never been done before in the history of the market. Richmond Fed came out, missed estimates, crashed into contraction territory from 6 months highs. I don't know if you remember last month, the Richmond Fed told us there was a 6-month high reached. It was the biggest drop in history for the Richmond Fed. It's obviously an indicator that you can't put a whole lot of weight into. Lastly, this morning, new homes came out, beat estimate amazingly, because considering every other economic indicator and even other housing indicators are either missing estimates or showing recessionary levels. Somehow, miraculously, new homes beat estimates and came in with the highest amount of new homes bought in the past 8 years. So they're trying to tell us, the government is trying to tell us that more new homes were bought last month than there were in the previous 8 years, monthly, on a monthly average. So hard to believe, could be a little finagling there. We all know the Fed is hawkish. They're insisting they're going to raise rates. They want to raise rates in June. The rest of the world is telling them not to raise rates. You got China giving them a warning. You got ECB basically warning them. And then you have the bond market telling the Fed, no way you could raise rates. But yet these 12 or whatever it is, Fed governors are insisting that they're right and the rest of the world is wrong. So we will see what happens in June. If they raise rates, maybe nothing happens. Maybe it creates some big action, which could potentially be very good for us. So let's get to the trades. Like I said, 3 trades. So the first one that we're going to go over is the US dollar Japanese yen, which was a scalp, which was a full trade position. We correlated it with the Swiss franc to Japanese yen because they're highly correlated. We had half our size there. So we are taking some risk, some directional risk. It worked out beautifully. US dollar Japanese yen, we were long 109.313. Again, it's a scalp, so you're not looking to piece out. You're looking to make whatever you can make. We sold 109.434, picking up 12.1 pips, and you can see what it did overnight. I mean, we were dead right. It ran right to the figure of 110. Again, it's a scalp. You're using, the most leverage that you'd want to use on a scalp, whatever that may be. That's a trader's preference. So again, if you could grab 5, 8, 10, 12, 20 pips, it's a home run. So here we picked up 12.1 pips there. Again, we were correlated with the Swiss franc Japanese yen, highly correlated, half our normal size there. You can see it really didn't do much until the big move came in the overnight action in US dollar Japanese yen. That's when the Swiss franc Japanese yen really started to move. But while we were in it didn't do a whole much. We were short 110.426. As soon as you get out of the US dollar Japanese yen, you're going to want to get out of the one that you're correlated with. So we got out 110.469 for 4.3 pips. Size adjusted 2.2 pips. So overall, that scalp basically gave us 10 pips. So that's, it's a home run, especially considering that we're really reducing our directional risk by having it correlated. And then the last one is a swing trade in Aussie yen. We were short this 78.961. When it was coming down, we saw these bottoms here. It's a lot to get through. We took it out 78.716, picking up 24.5 pips. We had 20% of our normal size, so that's equal to 4.9 pips. Unfortunately, you can see what it did. It did bust through that overnight, came all the way down to 78.30. Came down another 40 pips from where we covered. But again, we'll take it. Why take the chance that this thing holds and bounces hard in our face? So we took the 24.5 pips, adjusted for size 4.9, and moved on. So that's it. We're going to wrap it up. If you're still trading now, good luck. If any signals come out, they'll be coming your way, and we'll be back tomorrow, assuming we get some action tonight, tomorrow morning. Have a great rest of your day.